And here we go. So, good morning, everyone. Welcome to Talk About TV, where we talk about all things experiential outdoor hospitality. I'm your host, Michelle Oliver, and today I am absolutely thrilled to be here with Bruce Hurta of Business Finance Depot. And Bruce, I'm just going to read a quick introduction, and then I'd love for you to share a little bit more. So Bruce is an SBA real estate loan expert, lender, and public speaker committed to helping small business owners achieve affordable financing to build and grow their business. And very specifically here today, we're going to talk about outdoor hospitality businesses. I know that you are our preferred lending partner just because you have done this for so long. You are so attentive and so understanding about all the nuances that people are dealing with. And I just want to welcome you and thank you so much for being here today.
Well, thank you for having me as your guest. In your comments, you mentioned my many years background of small business lending experience. And the only thing that
Yeah.
I would add to that is that for the last decade, that has been my focus has been narrowed down to the outdoor hospitality industry. Or
Yes.
these days, experiential hospitality.
Yeah.
There's
And next year it will be called transformational experiential outdoor hospitality. Yeah. And then and then it'll be transmutation. Yeah, there's always a new buzzword, but the whole idea is, and that I find fascinating every time I have a conversation with you, is that you actually are creating an experience as well for people in this space. And when you specialize in a specific niche, you're able to do that, right? You're really able to basically do what we do is be that concierge and be hospitable and provide all of your customers with a great experience because a lot of people come into this knowing nothing about outdoor hospitality. And I think you probably know more than many people who think, hey, I'm going to just jump onto this glamping bandwagon and throw up a tent and see what might materialize. So there's all kinds. But okay,
Yeah,
to get
and
yeah, go ahead.
more important than what I know is the relationships that I've been able to build in this industry, just like you. It's those partnerships that
Yeah.
really make our services valuable.
Yeah, and caring enough to introduce people to the right people because we aren't always the right person. Um, you have access to such a large variety of solutions for people. So just to throw out something, let's say that I have just purchased my first, or I'm about to purchase. I want you to help me with the purchase of my first RV park. What can you do to help me? And I have no background in this.
Well, first of all, it's a good idea to purchase an existing, already successful business rather than trying to build one ground up if you've never done it before.
Yeah.
Because either way, if it's your first time, there's going to be lessons learned along the way. But if it's a startup campground and you're learning the lessons, that can cost you a lot more. If you've got one that has a track record of performance, you can at least run it like they did and produce at least the results that they did. And hopefully, if you're doing something right, enhance those results. And so the risk to you, your partners, your lenders is significantly reduced by
Yeah.
purchasing an existing successful business rather than trying to do a startup.
Yeah. So it's easier for you to provide lending options for an existing successful business. What if I'm coming in and does it make a difference to you as a lender from your perspective if I have a background in this, if it's brand new, if I have partners, or if I'm just kind of exploring doing this alone? How does that impact your decision?
Um, Whether the lender is financing a startup business or the purchase of an existing business, the borrower or the buyer's business management credentials are essential to be assessed
Yeah.
by the lender. They want to make sure that you can be successful in this business based on your background and your education, work experience, business ownership, and management experience. And so, if you're getting into outdoor hospitality, do you have any related business management credentials if you've not been in outdoor hospitality before that are transferable to this industry? And of course, running any small business gives you a certain level of credentials as far as managing employees, handling marketing and personnel issues, and paying taxes and buying insurance and all of that. So
Right.
that's valuable, and the lender
Yeah.
recognizes that and evaluates your capabilities based on a management resume and your history, your work history, your business ownership history, and of course your financial credentials as well, and credit credentials. All of that is weighed into the credit decision.
Yeah. So I'm just thinking about all of our clients. So many of the people that we work with, they own already, they have properties and they're wanting to expand. And this comes back to the experiential part, right, of experiential outdoor hospitality, where everyone, the bar is being raised. So people are looking at how do I add more accommodations that actually create an experience just by virtue of the type of accommodation that I'm adding to my property. If I have an RV resort, and many of the walls are coming down between RV resort, glamping, camping, dispersed hotel. So if I have an RV resort and say I want to add 15 cabins or 6 cabins or something, unique accommodations, how can you help me as a lender with that type of thing?
Well, and that's an ideal situation for a lender assessing risk because they're looking at a business that's already successful and you just want to enhance it, build it, and grow it.
Mhm.
They like that. Um, so then we get down to evaluating financing options. Uh,
Yeah.
Typically, with our most popular loan program, the SBA loan program for financing hospitality businesses, you're financing the whole ball of wax. You've got financing for the full development, including the real estate, and that's usually permanent financing in place, whether it's SBA or conventional financing. And so if you're expanding with new park models or glamping
Hmm.
units of some kind, you don't want to refinance the whole package. You want financing just on this asset. And so that's where we go to a business equipment lender, one that's
Okay.
satisfied taking a title on that RV or park model and using that for collateral, but looking at the business and its cash flow and its repayment ability to pay back the loan. Um, the SBA loan, if it were for the same thing, would be a 10-year loan. And you could do an
Okay.
SBA loan that's not real estate, and that's a 10-year loan. If you have the SBA loan where you're financing the whole project, that includes the real estate, that's a 25-year loan. Uh, but when we get away from SBA and we go into pure equipment financing and do park models that way, that's usually a 5 to 7 year financing. And oftentimes these park models will pay for themselves in that period of time, and that works well.
Oh my gosh. Yeah, that's a great option. So you can do it either way with the land or without, and you've already mentioned 3 different time frames. Um, so we were talking about this yesterday, actually. Can they wrap the construction into that? Like what you have to pay for the setting and the skirting, and perhaps they have infrastructure. You can roll all of that into a loan, construction and the accommodations.
Yes,
And that would still qualify as equipment,
yes.
where the park models are the
Um,
asset. Okay.
what might be different is maybe the down payment requirement might be a little bit different.
Hmm.
It's going to be based. lender to lender. And at Business Finance Depot, we represent multiple lenders. So we're usually giving the borrower, our client, multiple options.
You seem to have the answer for everything, Bruce. It's wonderful. So I can
That's what
come
you
to
get when
you.
you're talking to an old man that's been doing it a long time.
Yeah. So I can come to you just for our audience. If you've never purchased in this space, RV or glamping or campgrounds, Bruce can talk to you about that and introduce you to the people necessary because we've spoken to a number of the same people, and a lot of people don't understand what they need to get to that point where they can even apply for lending. Having a feasibility study, all of that kind of thing. Is that correct?
Yeah, usually after an initial conversation and understanding the financing need of a potential client, I send them a checklist.
Yeah.
And that changes the whole conversation because
Yes, it
now
does.
they have a roadmap on what it takes for me to build a good loan file for a potential lender. And sometimes it's a lot, and it raises a lot more questions and gives us more opportunity for conversation and understanding of what we're getting ready to go through.
Right. Well, giving them that roadmap is absolutely everything. So it's remarkable. It's a pretty complex thing. So I was about
Oh,
to
I
say
just
it's
shared one
remarkable
with you,
how,
didn't I?
yeah. Yes, you did. And people come in with all different kinds of backgrounds, and whenever there's development involved, it can get so complicated. So I love that you know so much about it and can actually guide people through this. So what other types of scenarios do you run into and obstacles that people run into that maybe they aren't able to mitigate? Maybe they just don't know to anticipate these obstacles.
Well, when we're talking about RV parks and
Hmm.
outdoor hospitality, the flagship loan programs, the SBA loan program. That's where you can get the lowest down payment, the longest repayment terms. You can finance new construction and new development. However, that's a loan program designed for small business, and it specifically excludes financing for housing. So if your
Oh,
project is one where people are renting monthly and living there, or maybe they're work campers and they stay longer term, it will probably get classified as housing. And that greatly restricts what you can do as far as construction and development financing, because a lot of the housing lenders, mobile home park lenders, and lenders for long-term RV parks, they want to lend on stabilized revenues. They don't want to lend on projected revenues, and they don't want to do construction financing. Not in the realm that I work in, where most transactions are under $10 million. When you get over 10 million, yeah, there's lots of different equity sources and development financing resources. But in the small business lane where I work, um, sometimes if you're developing a mobile home park or a long-term RV park and you need construction and development financing, that means you're going to have to do it at the local bank, or you're going to have to do it with equity, because there's
yeah.
not a lot of specialized lenders, and SBA lenders can't do it.
Do you want to speak a little bit to the USDA, the differences? Don't you
Sure.
work with those loans as well? I know there are times when that has solved problems with some of our clients, but there's so many variables and little details that I know nothing about.
Yeah, for people that are familiar with the SBA 7A loan program, that's the most popular SBA flagship loan program. Uh, the participating lender lends out the bank's funds, and then they get a
Mhm.
partial government guarantee. If that loan ever defaults and they have a loss on it, the government would cover part of that loss. And so it greatly reduces their risk. And that's why they can offer better terms. Um, so where was I going with that? What was the question?
The USDA, the
Oh,
other type
USDA. Oh,
of loan.
so
Yeah, like when is which
so
better or more
the
appropriate?
The USDA Business and Industry Loan Program is structured almost exactly like the SBA 7A loan program, where they give a partial government guarantee to a participating lender. So, in what situations would you use SBA? I would say anything up to $10 million,
Hmm.
particularly up to 5 million, because the 7A loan program only goes up to 5 million. There is the SBA 504 that goes up to 10 million, but it's a little more restrictive in its guidelines. What's different about USDA is that your business has to be in a rural location. That's generally a population under 50,000. Most campgrounds are. So
Yeah.
that's an option. Uh, the other thing that's different about it is that it's not a centralized loan program like SBA, where SBA designates preferred SBA lenders and gives them complete authority to do the loan. After the USDA lender gets it approved, they've got to go through a second round of approval at USDA. So
Okay.
SBA is much more user friendly. If you're borrowing less than 10 million, we'll probably go that route. But if it's over 10 million, USDA goes up to 25 million per project.
Oh,
SBA
wow.
had a
That's the difference. Sorry to interrupt.
SBA had a per
That's,
borrower limit.
hmm.
USDA doesn't have a borrower limit. They just have a project limit, and it's 25 million. So you can do a lot more with USDA with larger projects, and it's worth the extra trouble.
Yes, absolutely. We've worked with some projects that's exactly what happened, actually. It was perfect because it was large enough. And even though it's a phased kind of development, which most of them are, you just can't get there with the
Yeah, phase
SBA.
one was too
Yeah,
big. Yeah.
right. Yeah, interesting. Okay, so do you want to maybe share some experiences that you've had? I know that there's like, you know, anonymity here, but maybe some scenarios that you could share of difficulties that you've helped people through, kind of specific scenarios of ways that you can help in these situations?
Well, I've
Or
got
does
one client.
everybody have to just be the perfectly qualified? Because I know, I know most of the human race is not, and people come to you with all kinds of like, help me figure this one out, Bruce. And you've been able to often.
Well, I have one client that just recently gave me permission to share their name on
Okay,
social media and tell
here
their
we go.
story. So I know I can use their name, uh, but it was a startup glamping business, and this was a couple of years ago when I was still with Ameris Bank,
Mhm.
and glamping was just too new, and I hadn't done
Yeah.
one yet. So this was my first one. Uh, the way I met the borrower was I was invited by Bush Tech Safari Tents to
Okay.
speak at an event that they held in Georgia at somebody's RV park. And they needed a presentation on financing for their prospective clients for the Bush Tech uh,
Right.
African safari tents that are
Yes.
and so I did, and that's where I met the owner of this business, and she was actually a consultant, a hospitality consultant for large hotel chains. And she wanted to get
Hmm.
out of that corporate world, and she had a vision and a market, a feasibility study, and a plan. And I mean, she was a hospitality professional, but she couldn't
Yeah.
get the financing for a startup glamping business with great qualifications.
Yeah.
She
Crazy.
had good credit. She had the equity required to, her down payment or to qualify. She had a great business plan that was based upon a market study with a lot of data on who her competitors would be and what their average rates have been and their average occupancy. And she was able to do, a massive comparison grid on the different features that she would have in her resort compared to others. And we found an SBA lender that said, "Hey, we like RV parks and outdoor hospitality. We're going to step into glamping." And
Oh,
uh,
that's
we got it done.
wonderful.
And
Yeah.
It's a beautiful, it's called Dunya Camp, Dunya, if somebody wanted to Google
Okay.
it and take a look
Yeah,
at
you should.
it.
Everyone should go check it out. I definitely will. So that was your first deal,
That
and
was
you
my
got it
first
done.
glamping. That was my first glamping ground up startup,
Yeah.
new
Was
construction.
that a complete, it was all greenfield development then?
On the side of a
Or,
mountain in a forest,
oh,
overlooking a
seriously?
big vista, uh, very remote. Those were the challenges.
Okay. So that
They
was a full construction
they
and
built the platforms to install the
infrastructure.
tents on. Inside the tents, they built out the inside with drywall, plumbing. It's luxurious.
Wow. I'll have to go
And it's a
check
and
that
it's a
out.
and it's a small wellness resort. And the owner, Sangita, actually does Reiki healing, and
Yeah.
she brings in massage therapists. They partner with local fine restaurants and just
It sounds like they are really doing it right. I definitely want to reach out to them. So how many accommodations do they have? Do you know? Or when you
it's
started,
small.
like what they
They have three, I believe.
Oh my gosh. Okay. And what was the acreage on that? How much
I
do you
don't remember.
remember?
I don't
I'm
remember.
just curious of, yeah, well, that was a huge accomplishment and that set the precedent for,
You might want to feature Sangita on a future
I
episode.
was just thinking of that because I have a new, I'm doing that every Monday now. And the resorts I'm featuring have to meet a specific criteria. Two of the things include a wellness component and engaging the guests with nature. So it sounds like it could be perfect. I'll definitely reach out.
Yeah.
That would be wonderful. Yeah. Okay. So what am I missing here? Because I obviously don't know all the right questions to ask. You are the expert. I know we spent hours, or I spent hours listening a couple of years ago at Ojai to you, asking questions and listening to learn from you about the financing. Things seem to change quite often, but you have access to so many different solutions, correct?
Yeah. One thing I try to do with that initial interview and learning the prospect's needs is
Hmm.
look at different sources of funding. I mean, yeah, SBA is my flagship program. That's my specialty, my expertise, and I've been doing it for years, and I love it. But you can combine that with other funding options. For instance, a lot of our clients, they're getting out of a long-term career and they're going to
Mm,
start a business and they
yeah,
want to do it with retirement funds. Well, there is a way that you can take retirement funds and roll them over into your business. Basically, just take the money out of the stock market and invest it in your business. That can become your
yeah.
down payment with the lender. It could be extra working capital for future growth. And you don't
Hmm.
have, there's an IRS regulation that governs this, and you don't have to pay taxes when you withdraw it or early withdrawal penalties. You just have to follow IRS guidelines on your filing each year. So we represent a consultant that walks the client through that process. They have to set up a C corporation to own the business, and then
Hmm.
their business owns that C corporation, is funded by that C corporation stock. Um, there are also situations where people maybe need to buy a piece of land really quickly. They can't wait
Yeah.
to close on an SBA loan, which can't close until you're ready to start construction. And so they've got to tie down the land. So maybe we need to come up with funds another way if they can't get seller financing. So we might do an unsecured business loan just based on their personal credit and their tax return, not based on the business. Uh, we also have lenders that'll do a HELOC if they have equity in their home and they want a home equity line of credit to draw upon. That's your cheapest form of borrowing. Uh,
Hmm.
and then, like we talked about a few moments ago, business equipment lenders, when you don't want to finance
Right.
a project, but you want to finance a park model or maybe uh, maybe your internet systems or your waste systems. Those are all eligible equipment financing issues.
That is the solution really for most of our clients, I think, when they're doing these CapEx projects. But that so regarding the SBA loan doesn't fund until construction begins, you said. Is that
Well,
right? Did
typically, if it's a startup business, because
okay.
with SBA, because it's a small business loan program, the lender's not
Mm-hmm.
allowed to finance raw land. It's got to be built upon immediately. So that way, you have a
Okay.
business on it, and so the lender can't close the loan to buy just the raw land. They've got to be ready to build on it.
So that's only for a greenfield development. But if I'm purchasing an existing RV resort, there's no, and I'm doing an expansion at the same time, there's not really a hesitation. You're just investing, like the lending is the collateral is the business
Yeah.
and the land and the whole thing. So,
Although
um,
in that
how,
case, you're primarily borrowing for the expansion, and
yeah.
you may be refinancing the whole project. But if that expansion requires permits, the lender probably wants you to have the permits in hand at closing.
Unfortunately, there's always permitting involved. So how long does a typical SBA loan like that take? Like if I'm buying the property and I'm doing an expansion project, how and I meet all the qualifications, what kind of time frame does it take to just get approved and funded?
Start to finish, on average, a couple of months. The
Oh,
ones
wow, okay.
The ones that take longer are the ones where we're waiting on information from the borrower, whether
Mm,
that's engineering drawings and or a finalized construction contract or permits, all of that. Uh, those or we might be waiting on the appraisal that's required to close the loan, or an environmental site assessment, or just legal document preparation. So sometimes when we're waiting on third parties, that can draw it out a little bit longer than that.
yeah, so one of the things that I see happening is people will buy an RV resort, an existing business, do the expansion, they're making the improvements, and they're doing well. And that's the beginning of building this momentum to create an entire portfolio. So I'm assuming that if they do it well one time, it becomes easier and easier and easier. And that's why it's so fun when you see someone, they're like, we just bought another park. We just bought another park. And
Oh, a track
um,
record is everything. When you develop track record like that, then you have so many financing options, and you graduate from SBA,
yeah.
and you reserve what you're able to do with SBA within its limits for your startup and more difficult projects.
Yeah, because why not keep going? Like we're all crazy. We just want to do yet another business, right? I
Yeah,
think,
one of the nice things about the SBA 7A loan program is that you can do uh, construction and development and your permanent financing all in the same transaction, one loan, one
yeah,
time closing, and it's permanent financing for 25 years. But
yeah,
it only has prepayment penalties for 3 years. So a lot of people will use it for the construction and development to leverage the project as much as they can. And then after 3 years, they wait long enough until they have stabilized revenues. Then your options for refinancing are wide open.
yeah, that's fantastic. And that's about how long it takes. So three
Yes.
years to really, yeah,
Yeah.
that
At
is a
least.
really good option. Yeah. Well, in best case scenario, you've got by year three, you're at least stabilized and
Well, year one is just
hopefully,
construction.
yeah, yeah, it's true. Takes a very long time. Well, Bruce, this is so informative, and I just appreciate so much having you come on and share all these options. And I encourage everyone, I'll put your contact information in the comments, and anybody who is considering anything in outdoor hospitality, reach out to Bruce. I love this equipment financing option. That's a game changer for sure for our clients because it enables them to grow and, scale much more rapidly.
Well, thank you so much for having me, Michelle.
Yeah. Do you have any closing comments, any burning desire of inspiration to share with our audience? Say yes, go ahead and do it. I know that you're involved in some of your own personal projects, right? With outdoor hospitality. You kind of have the bug.
Yeah, I'm just too old.
Oh gosh, that's not
That was the
true.
part I didn't want to manage it. I'm willing to
Yeah.
develop it. I've got the land, but thoughts about managing it, we haven't gotten over that hurdle yet.
That's probably a very good call. But there are others who can help with that
That's
too.
right.
Yeah, as
Yeah,
you know.
got to put together a
Okay,
team.
yes, that's right. And you know all the right players. So you can build whatever you want. You're not too old. Oh my gosh, it's like a second. All your dreams get to come true now, right? You get to do all the fun things. So
Absolutely.
yeah. Well, thank you again so much, and we'll have you back again soon. And I just encourage everyone to reach out to Bruce and get your questions answered, and he'll help you through what can be the most trying part of all of this is just getting your financing in place, and then you're off to the races to deal with all the other obstacles that are
Yes.
coming. Yeah. Okay. Well, thank you so much. Have a beautiful, wonderful week, and I will talk with you very soon.